In market mania, a major stock market plunge can put investors on edge. Let's bring in Jared Levy, the Chief Market Strategist at Peak American Financial. Jared, you have been through a number of steep market sell-offs. What do investors need to know?
I've been fortunate, or maybe not as fortunate, to have been through the dot-com boom and bust. I was there in 2001. I was trading in 2008, 2009, and obviously all the corrections that happened since then. One of the things that we really stress, whether I'm advising regular investors or talking to wealthy individuals or funds, is that we've got to, did things materially change? Has the thesis or your thesis or theory materially changed? What's happening right now is there's a lot of pain, a lot of stress. A lot of times these sell-offs trigger underlying panics, right? And it almost becomes a self-fulfilling prophecy. So for me, I'm reevaluating every theory I have and saying, okay, we know the markets are correcting here. We expected this. Does this change the way that I feel about my investment? And that's the thing you need to ask yourself. And also the second thing is, what is your time horizon? If you're a retiree that's, you've got to get out, next year and start taking money from your nest egg, you've got a different problem. If you're a younger investor or a trader, then again, these can be opportunities for you to trade or invest.
What would be your trade or investment?
Ooh, it's tough. So obviously, last week going into Monday, lots of shaky stuff going on. What I will do, Angie, is I like to look at how stocks behave during these periods versus how they behave normal. Again, we talked about Google last week, right? Given all this shakeup in mega caps, Google's actually kind of held its ground-ish, right? So that is a positive to me. If investors are, let's just say we're off, 10%, 12% from where we were just last week, and your stock is only off 5%, but it's within that sector, that's okay. So again, I still like Google here. I also still like, as we've talked about many times over the last 6 to 8 months, longer duration bond ETFs like the TLT, which by the way is skyrocketing. Now, is it going to keep going to 150? Maybe not, but I think that one still has some room to go. So again, like Google, like TLT, I do like utilities still. XLU is another place. Again, it's a place that people have been flocking to. I'm okay owning XLU here because, again, it's a little bit of that safety play while I reevaluate where I want to go next.
I want to circle back to something you said earlier. If someone is retiring in the next 6 months to a year, what do you have to say?
So the good news is we're not off 50% in the markets. And just to your point, Angie, a lot of investors have made a lot of money over the last couple of years, but last 10, 15 years. So if you are starting to feel a little uncomfortable and you're going to need your money here in the next year, might be a good idea to take your risk off the table, reevaluate, right? While we're still because this thing could go a little deeper, and I do think it will, reevaluate and then decide, okay, do I want to jump back in? Definitely talk to a professional, definitely take your time. I wouldn't do anything panicky here, but you might want to reevaluate if you're going to be safe to stay into what I think is going to be a volatile market over the next few months.
Jared, always a voice of calm and reason. Thanks for being on our show.
Thanks, Angie. It's great to be with you.
Go to businessfirstam.com for where to see our show on TV.